All right, welcome back to the InvestTalk Classroom. I'm Justin Klein.
I'm Luke Guerrero.
And today we're going to talk about short selling. And I know, Luke, you really like this topic. I do too. It's always interesting to explain this to investors, both the risks and the potential rewards. And so let's dig into this. Now, why don't you talk about what really short selling is?
Well, it's an exciting topic.
It is.
I love it because most of the time you just talk about what you should buy.
Yeah.
And this is essentially saying, what shouldn't I buy?
Yeah.
Right?
I would say there's opportunities in every market. And sometimes it's not what to buy, but it's also what to sell. And you can sell short. You could sell positions that you already own. But most people overlook the selling short aspect.
Exactly. So what does selling short mean? Well, short selling is something you do when you believe a company's price and value is going to go down, right? So mechanically speaking, what you end up doing is you end up borrowing that security
From your broker.
From your broker who borrows it from someone else, usually a large institution, and you sell that security at whatever price it is today, hoping that when you have to buy it back and return it to the person you're borrowing it from, that price is lower. And in that case, you make the difference there.
Yeah. So it's just the inverse, right? You're just doing the selling before you're doing the buying. And, this is a common practice in the institutional world, hedge funds. That's kind of where most hedge funds the name hedge fund kind of got its name, is these funds were shorting different securities. But it's a very common thing nowadays. And there are risks to that. Obviously, there is what is called a short squeeze. And it can be a stressful thing if you're caught in a short squeeze, because theoretically, the losses are infinite, right? Where if you buy a stock, your maximum loss is whatever capital you put into that, right? You buy $2,000 worth of a particular stock. The most you can lose is that $2,000. If you go short a stock, say at $20 per share, maybe short 100 shares, that's $2,000 worth, right? Effectively, that could go to infinite numbers and you can lose infinite amount of money. Now, do you think that risk is overblown?
I wouldn't say it's overblown. I mean, some people have been squeezed out of existence. You saw it in the GameStop situation where Citadel had to come in and bail out a hedge fund that was about to go under. It can be a serious problem, right? But again, it's about knowing the risks with what you're doing.
Yeah. And there are many popular stocks that have been shorted. Tesla is probably the biggest example, right? There's been a lot of short attacks on the name and plenty of short squeezes, right? That's part of what Elon's moniker has been for a while. It's kind of changed that recently with focusing more on Twitter, but it was always to squeeze out the shorts within Tesla. So there are high profile common shorted stocks, and there are ones that most people don't talk about. And there's short interest that you can probably find on most databases that will tell you what percent of the float, which is the amount of shares that are traded in the marketplace, what percentage of them are short. And if there's a lot of them, that could be a catalyst for a short squeeze.
Yeah. And there's a lot that selling short and short sellers can tell you about markets, right? Because essentially it's just somebody exerting their expectation of a security's price and making it available for everybody to see. Just as volume towards buying a security, driving the price up, tells you market participants expect good returns in the long run. High short interest and expensive costs to borrow a security tells you that the market has a negative view of that security, right? And that's important information as well.
And it makes the markets more efficient.
It does.
Right. So I think short selling is an important aspect of making a market and making that market efficient. And so you as an investor, you certainly can go do it yourself. You certainly need to understand the risk like we talked about. Don't fall in love with it, because most stocks go up, right? Most over time, equities tend to go higher. So it's not something that you want to dominate your strategy with. I don't think many people have gotten rich by just being short sellers, right? But it certainly can be a tool in your toolbox to take advantage of market opportunities. And like I said at the top, sometimes that is selling the stock. Well, this has been another episode of InvestTalk Classroom. I hope you learned a lot. And if you want to learn more, just head over to investtalk.com and subscribe to our podcast.